Triple EMA is a trend trading strategy that uses 3 different periods exponential moving averages to generate trading signals. Here are the definition from Investopedia. The triple exponential moving average was designed to smooth price fluctuations, thereby making it easier to identify trends without the lag associated with traditional moving averages. It does this by taking multiple exponential moving averages of the original EMA and subtracting out some of the lag. The TEMA is used like other EMAs. It can help identify trend direction, signal potential short-term trend changes or pullbacks, and provide support or resistance. While moving averages is one of the easiest to implement trading strategies and all traders knows about it, not all trade it successfully. In today's video, I'm going to reveal the performance of trading the Triple EMA and you can decide if this strategy is fit for your trading style. Before we start, click like and subscribe to my channel, so you won't miss my coming videos. If you've been following my channel, you should know by now that most strategies works depending on the context and how we trade the strategies, their performance can vary greatly. Without further ado, let's share my version of Triple EMA settings. We'll be using the 9 EMA, 21 EMA, and 55 EMA as my Triple EMA. For buy signals, first we check if price is above the 9 EMA, 21 EMA and 55 EMA. Wait for the price to retrace back between the 9 EMA and 21 EMA. While the price is in between 9 EMA and 21 EMA, only buy when the price close above the previous candle's high. And for sell signals, we check the prices below the 9 EMA, 21 EMA, and 55 EMA. Wait for the price to retrace back between the 9 EMA and 21 EMA. While the price is in between 9 EMA and 21 EMA, only sell when the price close below the previous candle's low. We're going to use a dynamic exit by trailing 1.5 ATR and using the daily chart. Test will be conducted on currencies and US indices. The testing period is from 2015 to 2020, we're using the more recent years so that the backtest results are more relevant to the present. First, I applied the strategy on the Euro-USD pair, the profit factor is below 1. I also tried to apply the strategy on other time frames, they are also in red, so we can skip this pair. Next, I checked out the US dollar to Japanese yen pair, again, the performance is also poor. So I moved on to pound sterling to US dollar, the strategy also don't have much success. From what I see so far, I already have a rough idea that the generic version of Triple EMA strategy doesn't work well in forex. Next, I go on checking the US indices. Finally we got something that have some potential. We can see the strategy is profitable if we trade it on the Dow Jones Index daily chart. With a win rate of close to 50% and a profit factor of 1.3. Moving on, we can see if we trade the SPX we'll be in red, as well as the QQQ. In my example, we have verified that the Triple EMA is only profitable when trading the Dow Jones Index for the last 5 years. I also quickly skimmed through the performance of the strategy on lower timeframes and in general, the results are worse. This could due to the increasing commissions caused by overtrading. In summary, trading the Triple EMA on the daily time frame produce a better results than most of the other time frames. However, Triple EMA performance is below average, and you should be careful when choosing it as your trading strategy. With that being said, we are testing the most generic version of Triple EMA strategy. It might still be profitable on certain assets if you conduct mindful optimization on its parameters with sizable data. If you enjoyed this video, please hit like and subscribe, so you won't miss my next video. Thanks for watching and see you next time.